Welcome, one and all, to the War Room. It is Friday, December 1st, 2023. I am AgYield's marketing manager and everyone's favorite backup host, Jack Coakley, filling in for Dan Dempsey, as I often do. First off, we got another full week of War Rooms in the books. I just wanted to express a little gratitude to anyone who's watching live, anyone that's submitted their feedback, submitted a question, subscribe to the YouTube channel, or reached out in any way, shape, or form about the War Room. We cannot thank you guys enough. We have big plans for this broadcast going forward, and we appreciate your help and in that process. We couldn't do it without you. As always, feel free to submit a question in the chat, or you can always send us an email at info@agyield.com. Let's start off with John to get some overnight numbers. John, take it away.
Yeah, thanks, Jack. Overnight, Dece corn was down 2.5, 459 1/4. March corn down 3, 479 3/4. Jan beans were down 12 1/4 at 1330 1/2, and Dece wheat was down a penny at 569 1/4. Looks like some weakness with the weather forecast in South America.
Perfect segue, Johnny. I really wanted to kick things off this morning with some more of that Brazilian weather conversation. Let's kick it over to Brian to get some more information on that.
Yeah, I appreciate it, Jack. Thank you. Yeah, it looks like there's a little bit of weakness overnight. Looks like Argentina's been getting beneficial rains. Might help out the areas in Brazil that are kind of missing out on them. The Brazil, the big boy, is everyone's kind of eyes are focused on. East has been getting very decent rains there. Looks like the forecasts are moving more to the central to southern parts of Brazil where Mato Grosso stands. So I think, all eyes are on that to see if that weather forecast materializes. So I think that's where you're seeing the initial weakness overnight.
Excellent stuff. Let's kick it over to Dustin, who always has some interesting things to say. Dustin, what do you got?
Yeah, thanks, Jack. Yeah, well, we did first day of deliveries, we did not get any corn deliveries. So as we mentioned yesterday, spreads probably widened out enough to get commercials to kind of hold tight onto that control of those facilities. We did, however, get some corn deliveries last night. So SocGen delivered 220 corn. It's another just kind of sign of, that desire to hold on to that ownership. As a reminder, anyone that would actually take delivery right now would be putting up the full value of that contract. So if your opportunity cost is 5.5% for that money, you got to take that into account, plus the 8 cents a month storage charges for receipts. So that's a lot to get over. Certainly there is not, you can't make an interest rate right now that's beyond your risk-free rate. We're not at full carry for corn. But it is nice to have control of those receipts too at the same time in case something does pop up. It's just that desire for what happens between now and March. With that said, I think, going into the new year, we think about, where is the next kind of big target for corn? Growers that have been waiting for $5 looking at sub $5 price for most of harvest now, that could be a psychological number to kind of look out for. The 50-day moving average is right up at 495. We've gotten pretty cheap here. We had a bounce back yesterday. I wouldn't be surprised to see maybe gravitating a little north again.
Excellent. Justin, we've talked a lot this week about social media chatter and spreads. Is there anything else kind of on your radar going on that's really catching your eye or noteworthy?
Nothing that we haven't really been discussing, the past week or so. I think we talked about, kind of a bounce after first notice day, hoping we can get a rally, to some kind of level that little more palatable, for a farmer to sell. But I think what we just went through going into first notice day highlighted the, how undersold the farmer was going into harvest, making 3-year lows, forcing farmers to sell or roll at a historically wide level. And, over history, our experience is that when you get in those kind of situations, you get some bushels that just flat price sell. They get worn down. They sell what they kind of have to for maybe cash flow needs or to satisfy some loans, and then they roll the balance, right? So what tends to happen in this kind of environment, unless there's some kind of a catalyst, to drive things sharply higher, is the deferred month, meaning March in this case, kind of has these rallies and then gravitates slowly to where the December contract went off. We saw that happen. The December contract drifted to where the September contract went off and then went a little below it. So it's kind of this kick the can down the road, just slow, painful grind of, unfortunately, these carrying charges kind of eat away at the lungs, what we've talked about. So, when you roll to a new contract month and you force all this selling and then you get a flat price rally, if to Dustin's point, if we were to get to 495 futures off the March contract, that's going to be, basically a 40+ cent rally from where December traded a couple of days ago. So you got to keep that in mind. I mean, what do you talk about a 50-cent rally, we're already there in the spreads, right? So I think that's something to really keep in mind. One of the mistakes that I see people make a lot is, just being naked long and then watching every contract month drift slowly down to where, the previous one went off. So I would keep that in mind personally. That's, the fair market value of corn right now, I think is that 450, 460 area. Seems that, we kind of run into some business, but that's, that tends to be where the next contract will drift down to, like I said, unless something else happens.
It's really good stuff. Coming up right now is a segment I've always wanted to call Ryland's Cattle Corner. Ryland, livestock markets. Let's talk about it.
Thanks, Jack. I appreciate that. In the livestock corner, we had a little bit of a recovery yesterday in the past couple of days in the cattle market, but it failed yesterday. I think just overall, the cash market's really kind of beating everybody up. We're butting up against option expiration off the D's contract today. There is a ton of in-the-money put options right now from pretty far away. So there's going to be a big exercising, I think, coming up here going into Monday, first notice day. And as we've kind of seen, the market is kind of forced to figure out what to do with all these shorts or all these longs. So we can imagine that there's going to be quite a volatile trade out of the December contract into the February for those that are still relatively on the long side of the market. We're just not seeing a market that's really going to enable a whole ton of deliveries. So it just kind of feels like there's, everybody's keeping that weekly low in states right now in the cattle market. Cash, it sounded like the low side of cash was about 171 in Kansas, but they did pay up to 174, and Packers paid about 173 to 174 in Texas yesterday. So cash is still pretty weak here, and the board has been showing that it's just not willing to rally yet. There just needs to be a little bit better news here from either a supply standpoint, or we need to see some better demand. Weekly exports were just not exciting whatsoever to really drum that up. And we're coming into a time of year where you lose a lot of this meat demand, especially on the trimming side of things. So the market's pretty vulnerable. Seasonally, there's a big precedence to rally post first notice day, but more towards the end of next week. It's not like corn where you're just going to get this big explosion. Usually that doesn't happen. Usually it's delayed by about 3 to 4 days. On the hog side of things, the hogs are really kind of the sweetheart of the meats right now. They actually closed pretty well. February is starting to look like it's in pretty good shape. We're on the verge of taking out some pretty key moving averages. And it's mainly just because I think you get a little bit of this little bit better of a bullish sentiment from what's going on in China. They're actively trying to support their markets. But aside from that, exports were just mediocre, if not just a little bit disappointing this week. So really want to see something change in the demand side of things. Cash market started to stabilize a little bit yesterday, but cutout typically starts to drift off. And we're really focusing on expiration for December. That typically marks a little bit of a low in Feb. You could get quite a bit of a bounce in meats towards the end of next week, but overall the the trend in cattle is still pretty weak, and the supply side of things has been kind of a surprise. So we'll see how it shapes up today, Jack.
Thanks for that, Rylan. Yeah, beyond that, it seems like a pretty slow news day. Does anyone have any other thoughts? Any other things they want to bring to discussion?
Jack, just real quick, there was some announcements this morning, 198,000 tons of soybeans for 2023 to unknown and another 132,000 to China. An interesting thing there is a lot of these purchases out of the U.S. Or from China out of the U.S. has been, kind of their state buying program. So kind of filling up some reserves of soybeans. They've been, aggressively buying South American beans, but they continue to buy these, 120 to 300, 400,000 tons every week. It seems like that's been, a lot of like Sino Grain, their state buyer. They prefer soybeans as they store better than South American beans. So when we see these Chinese government buying programs, that's been coming out of the U.S. But like we said, that window is quickly shrinking for the private buyers in China, switching to South America more aggressively as we get, January forward. So I think it's kind of an, interesting fact that a lot of these beans, that have been bought have been from, state purchasers, which sometimes have a different, objective than just on paper, what has the higher profit margin, which we see those private buyers switch back and forth depending on the cheapest origin.
Excellent. Any other parting shots from anyone else? Well, guys, as always, thank you so much for tuning in. Like I said, feel free to, send the show, send the YouTube channel to a friend, get the word out. We're trying to, make this as valuable as we possibly can for you. And thanks again for tuning in. And we will see you next week, same time, same place, 8:15 Central Time. Thanks again.
Thanks, Jack.
Take care.